with market clarity for the month of November 2021. And before I do, I want to wish everybody who's watching this a wonderful holiday season and a successful and happy 2022. So as I said, this is for the month of November 2021, and we're going to talk today about what's going to happen with interest rates increasing. As you all know, or may have heard, the Fed has recently announced increasing interest rates for next year, which is going to be a result of various strategies the Fed has, one of which is to reduce tapering on its quantitative easing. This means that the Fed buys about $40 billion of mortgage securities each and every month, which increases the supply of mortgage funds available to the marketplace. And when supply goes up, price goes down in economics. And this is one of the factors that's been keeping interest rates down. So we're going to talk about what the outlook is next year for interest rates and home prices and sales volume of homes. Then we're going to talk about the correlation, historical correlation of interest rate moves and home prices and sales volume, and wind up with some trends for the Santa Clarita Valley. Right now, according to bankrate.com, the average 30-year mortgage rate is 3.3%. And we are looking at going into next year, ending up right around 3.7% for the fourth quarter. Now, this information is aggregated by looking at the projections provided by Fannie Mae, Freddie Mac, the Mortgage Bankers Association, and the National Association of Realtors, quarter by quarter, ending up at the end of next year at 3.7%. Home prices are ending up this year right around 18 to 20%. CoreLogic just published their data through October of 2021 and came in about 18% nationwide. So looking at that, we're looking at a much decreased rate of increase in home prices. So home prices will continue to go up, but at a decreasing level. The expectations of various forecasting agencies and companies are around 5.1% for next year. And the data is aggregated from Fannie Mae, Freddie Mac, the Mortgage Bankers Association, the Home Price Expectations Survey, Zelman and Associates, the National Association of Realtors, and I just saw where Realtor.com is also projecting a 3% increase for next year. So they're kind of all over, but all in the single digits with an average of 5.1%. Moving on, the volume of home sales will pretty much stay about the same. This year, we're coming in right around 6.5 million homes. And we're expecting to come in around maybe a little bit higher for 2021, 6.5 million for 2020, coming in around in a bit higher for 2021. And again, the agencies on this present on this slide are Fannie Mae, Freddie Mac, National Association of Realtors, and the Mortgage Bankers Association. It's interesting to note that the Mortgage Bankers Association is expecting a much higher increase in home sales for next year, going up to almost 7.5 million homes. The others are projecting volumes pretty consistent with what we are going to have in 2021. So, is there a correlation between interest rates and home prices? And the answer is somewhat. This particular slide provides the rate of increase in percentage increase in home prices year by year going back to the year 2000. And you can see here's the Great Recession years, 2007 through 2011, 7, 8, 9, 10, and 11, where home prices actually decreased. That was a Great Recession caused by a housing, by a mortgage, basically meltdown in the mortgage market. And you can see this particular increase from 5.81 to 6.41 preceded the recession, the Great Recession. Then we went from 3.6 up to 4.7. The home prices increased a bit, and then they decreased, but always increasing overall. And then going here to 2016, home interest rates went from 3.6 to 4.5. Again, the rate of increase in home prices increased a bit and then fell down a little bit, but then interest rates came down, and we all know what happened to the rate of home price increases in 2020. So we can say that there is somewhat of a correlation in the rising mortgage rates, but it isn't a direct dollar for dollar kind of correlation. Moving on, home sales probably are not impacted too much immediately by increased mortgage rates. We can see here that the mortgage rates, for example, here at 4.17, and this slide goes back to 1989. This axis here is in increments of 1 million. So we have an increase from 3.6 to 4.7, and you can see that home sales volumes kept going up except for 1 year, came down, and home sales volume increased again, and then interest rates fell, and home volumes kept staying about the same or actually increased, of course, in 2020. So there is going to be some impact by interest rate increases, which makes home purchases less affordable, but there's also significant demographic tailwinds behind the behind the home, the home market, the residential home market. And so we expect home sales to pretty much hold their own. Home prices will continue to go up, but in the single digits. Let's shift gears now to the local scene, the Santa Clarita Valley. And we're going to move through these slides fairly quickly. So right now, active listings, well, let me back up. The November, these slides present 3 months worth of data to iron out all the aberrations in the data from month to month. And then we look at attached homes versus detached homes, and then all together. A detached home, for example, would be a single family home. So based upon this data, the Santa Clarita Valley had a decrease of 24% in the number of active listings for the period ending November 30th. Pending sales are likewise down about 15%. Closed sales are down 9.2%, after being up 41% for the November period of time last year. So we went from 1,285,000 down to 1,167, a decrease of 9%, but that follows a 40% increase in home sales last year as we experienced a surge of home buying caused by the pandemic. The November median sales price for a single family home is now $800,000. And overall with condos, it's $727,000. This is an increase of over 16%. Median days on market is about a week because homes just sell real fast when they get on the market. And that's a time between the listing showing up on the MLS and the time it goes under contract. Month's inventory supply is 1 month. Anything less than 5 months is considered a seller's market. And you can see that we are now in a hyper seller's market. This is actually decreased from this time last year. We were at a month and a half. There is a showing appointment app called Showing Time. They provide data on the number of showings per listing. Look at this more like an index and absolute data, because not all showings are scheduled through Showing Time, but we can see that there's still quite robust interest by buyers in buying homes. So we had actually a 20.8% increase in the number of showings per listing for the period as compared with the same period last year. So anybody looking to sell a home can experience a lot of interest in that by buyers in that home. So that pretty much concludes our discussion for November 2021. Please keep in mind that we do provide these buyer and seller guides. The winter guide are available now, actually. So let us know if you have an interest. And with that, I'm just going to conclude with a little video, which provides some insight by various market experts on what's coming up in the home buying and home selling residential real estate market. Thank you for watching. Please let us know if you have any comments, and like and subscribe.